Okay, hey everyone, it's Mike Valtos, and welcome to the Orderflows market analysis for Thursday, August 31st, 2017. And it's month end. We ended up getting a nice rally in the S&Ps basically over the last hour or 2 hours of the session and closed up near the highs. Now, the effects of Hurricane Harvey are finally being felt in the commodities market. Oil was up about $1 and back over $47 as gasoline futures surged 8% on the day to $1.77. So gold, dollar showed little change, but gold is showing some additional life. It was up about $15 to $13.25. So let's jump into the market. But first, a brief disclaimer: this presentation is for educational and informational purposes only. It should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that could be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Okay, so that said, the tools I use in this presentation are the Orderflows Trader, which is the volume footprint chart, and the Delta Scalper, which is an additional order flow tool to read the delta and just make your trading with order flow a bit easier. Rather, it's what it does is it basically analyzes the delta for you and gives you buy and sell signals. But again, you should take it all in context of the market. Don't necessarily. I mean, people have built trading systems right around the Delta Scalper, but you should always take everything in context of the market. When you're buying, try to buy near lows and sell near highs rather than just taking everything blindly. I think that makes for better trading overall. So first, we'll talk about the Eminis. Like I said, Eminis, we put in a nice rally later in the session, but for the morning, we're pretty much kind of quiet. But that was to be expected. You got the non-farm payroll numbers tomorrow, and again, it was month end, and on month end, you tend to get some nice moves late in the session. As you're seeing portfolio balancing coming in, and tomorrow, Monday, you'll probably see some new positions being added in. I personally think the market tomorrow, Friday, will be an up day, but we'll see. Historically, non-farm payroll days have a higher percentage of closing higher on the day than they do lower. But the thing I want to talk about today is this. We'll start here with the 4-range E-mini chart. And 8:45 this morning, we started rallying up after the cash opened into the new highs. And then you got your divergence here on the high right here, negative delta 784. And then, you got one green bar, then comes right back with the stack selling imbalance, 319, 479, 1527, which is bearish. And it's, like I just said, take things in context of the market. And it's right up here, right off the high. It's a tick off the high, two ticks off the high that you're selling, stack selling imbalance starts happening. And then the next bar, you got the bearish ratio. Again, is also bearish. So you're getting a few signals already. You got your divergence, you got price rejector, you got stacked imbalance, you got bearish ratio. And, honestly, I was looking for this market to sell off. I was looking for it to, sell off down around 61. Right now we're trading 65. I was looking for a quick move down to 61. And what happens? So you got the one bar here, next bar. What do you get? You got some supportive buying in here, 3155, 2703. You got, it's not a bullish ratio. It's just your average, number, and your regular order flow occurring. Markets transacting, is doing what it's doing. And then we start rallying back up. So the third bar, you're back up inside your stacked imbalance zone. Now that's not a good sign, right? When you have a stacked imbalance, what you want is the market to move, and you want it to move quickly. You don't want it to sell off, over the next couple bars, rally back up there, and then expect to sell off. I mean, can it happen? Yeah, it can happen. But the further you get away from the stacked imbalance, the effectiveness of it lessens, right? I mean, it should be happening. If this selling is really legitimate, strong selling that's going to move the market, you should be seeing, you got a sign here with the bearish ratio, you got one imbalance, but in this bar you should also see some aggressive selling, not positive delta, not the market starting to move back up. And by the fourth bar, you're still in that stacked imbalance. You put in some decent volume in here. Now what you should be looking for when you come back up into the stacked imbalance is selling imbalances. Again, because you had the selling imbalance here early, now you're back up in here. Where are the sellers? Are they reappearing? No, instead you're seeing supportive buying, 2439. So by now, if you understand the order flow, you should see that, hey, you know what? The stacked imbalance is not going to hold, and chances are we're going to go higher instead of lower, because you're seeing supportive buying in these bars here, 3,000, 2,000, 1,500, 1099. You're seeing 2,400. And then in the fifth bar, I mean, that's why we draw these zones out 5. And I don't look for this level to come back 5 hours later and say, oh yeah, you had a stacked imbalance there at 850. I mean, that's bullshit. I mean, that level, the selling that happened here, right, is now. And to look at it 5 hours later and say, well, you had a stacked imbalance there 5 hours ago, and try and take a trade out of it is just ludicrous. You know, it's for the immediate term. If you rally back up there, look for the selling to happen. If it doesn't happen, then, you know, you had the initial selling, it's not happening again. Chances are the market is going to go the other way. It's not going to start selling off again if you don't get that selling that you had earlier, right? And what happens is, boom, you start making new highs. Boom, boom, boom. You got to get very aggressive buying in here. You're seeing some nice positive deltas. You know, nice imbalances, 3,000, 2,000, 1,800. Get up here, you start seeing some divergences. A nice negative delta up here. You have a nice big selling imbalance here. But it doesn't really build on it. Next bar back up, small negative delta, small delta, small delta. And then you start coming in here, right? Now this one's not as clear a sell, but it was still a legitimate sell. I mean, this market at this point looked like it was ready to come off. Again, you got your divergence, but you come right back up with the bullish ratio, and then you start seeing in here the aggressive selling appearing. Now this is the information you're going to get on a footprint chart that you're not going to get on a normal bar chart. You're not going to see this imbalance of 2452, 3,000, 2,000. You're not going to see that on a normal bar chart. You know, you need a footprint chart to see that information. But you could take that away and you can see that market is starting to move lower. You're seeing very aggressive selling into these big bids, and the market sells off down into the you know, the 64 area. You get a bit of a bounce, and you just start going sideways for quite a while. You know, like I said, later in the session, we started getting this rally here. You had the Delta Scalper giving a buy, Delta Scalper sell, and then boom, you got a Delta Scalper buy here right before you just took off. You know, so you're sort of spinning your wheels in here with the signals. 1244 long, 1319 short, and then, you know, 1329 long is, then you get the pop up. You got a ratio and divergence. Here's the ratio, here's your divergence. What happens? Next bar, instead of being down, it's an up bar. It's a bullish ratio. That's not a good sign. That's going to tell you that it's probably not going to work out. The short is not going to work out. Again, you know, that's what reading the order flow is. You don't have to wait for it to come up here to stop you out. When you see something like this, right, when you got your ratio to your divergence, that's your trigger. Then immediately afterwards, you get something that's bullish in the opposite direction after you got short. Best thing to do is cut your trade. Don't wait for it to stop you out. I mean, you could get out here at, you know, a smaller loss than your full entire loss. So, you know, say you're getting short somewhere here, we'll call it 2470. You could read what's happening in this bar and get out at 2471 as opposed to getting out at, you know, 2472, 2472 and a half. You know, you're saving yourself a point right there. You know, then later, you know, we sold off again, you know, after going into the cash close a little bit. You know, right now in the evening session, we're just kind of going sideways, which I expect us to do until the number comes out later at 7:30 Chicago time. Now, you know, just really quick on the 10 range chart and the S&Ps. Let me just find it here really quick. 10 range, here it is. Again, you know, you had some bearish signs this morning that you didn't quite see on the 4 range. You know, this I found very bearish. You had the divergence, you got the ratio, the next bar, a bunch of imbalances, and then it just went sideways. Unfortunately, not much of a move. Again, that's at 9:30. You know, by 10:30, it's just spinning its wheels. It's an hour into the trade, going nowhere. Again, that's a sign that the market's just going sideways. No point in letting it come all the way back up here. You know, it's stopping you out. You better, you know, after an hour, if you're not getting paid on the trade, you get out of the trade. There's nothing says, you know, the trade's just going sideways on you for, you know, an hour or two. You got to hold it. No, you get out. You know, knowing when a trade is not working out is, you know, half the battle. You get up here to this high. Again, ratio and divergence rather than the ratio. Many imbalances in here, a couple imbalances there. And to get a sell-off, yeah, not really. You get, you know, a couple points. before you go into the close. But it was something. Not the biggest trade, but again, you're coming into month end, so and the cash close. So once the cash close is over, you don't really get much movement on month end. All the activity is going to happen pre-cash close. Now, excuse me, I want to talk about a couple markets here. Excuse me, sorry. Really quick. What was it? I think it was the British pound and the Eurocurrency. If I could find my charts. Okay, so the Eurocurrency. Here we are. Now there's quite a few interesting things here in the Eurocurrency, but I want to talk about this low here at 8 in the morning, 8:13. The swing low at the time right here. You got this big volume, 1489 in this bar actually, and okay, so what were you doing just before? Okay, you had come up from your low earlier, right? Your low for the day was down here. Okay, 719. What do you got? Ratio and divergence. Now, again, just so I'm showing you ratio and divergence. Go back to whatever 4 or something. Okay, so at these lows, right? Do you have a divergence and a ratio here? No, you got nothing. No ratio. You got a divergence, not a ratio though. Next bar, no ratio. Here you got the ratio and divergence. You made a new low by 2 ticks, and you got a ratio and divergence again. This one is more interesting. You got point of control right on the bottom of the bar, and you got a nice little move up actually. From the 60 area up into up into the 70s. Then you start coming back down again. Again down here, no divergence, no ratio. No divergence, no ratio. When I say no ratio, every bar has a ratio. Whether it's a ratio you like or you don't like is another story. Okay, every bar will have a ratio on the bottom or on the top. It's whether it meets your requirement of ratio analysis. Not all of them do. So you're looking for certain types of ratios. So here you got the ratio and a divergence. Next bar, delta scalper, kicking in as well. So you see some supportive buying down here, 166, 135, point of control towards the bottom of the bar, which is also encouraging. But this structure right here is very bullish. And what happens? We go from the 38 area up into the up in here. Here maybe you got a real bearish sign with the imbalance on the top. There's some trap traders up here and towards the top of that bar. So that's from 38 all the way up to the 50 area is decent. And then you get down here 813, very strong volume, 1489, very strong delta 473. Delta scalper is giving you this nice buy. Next bar basically is just straight up. You see some volume down here on the bid side, and then look at this, all zeros. So there's very aggressive buying coming in. You pull back in this bar towards this point of control, and you just keep going higher. Higher, higher, higher. That was, what's that area? 50. 118.50. We trade up into the mid 60s. Eventually we just keep going higher, higher, higher. No major reason really to be cutting this position. Maybe you can make an argument up here. You got point of control up near the top. You got the price rejector. But even that, from 50, that's up around the 68 area. You'd be getting out, so that's a nice trade. If you're not, there's no signs up here. This is not just because you got bearish ratio doesn't mean shit. Doesn't mean you got to get out of that position. Then again, you start getting up here. You start seeing some bearish ratios. Maybe you might think of getting out. If you do, boom, you get another delta scalper giving you a buy signal here, and the market again shoots up from 81. It just keeps going up and up. No major signs really to be getting out yet. Maybe you can make an argument with this one. I won't get into it, but this is very kind of a bearish bar in the analysis. So again, from what was that level? 118.80 was it? I don't remember now. Where was it? Where was that imbalance? Yeah, here 118. Getting long here at 80. That's at 119 already. So again, there were some nice trades to be had in the Eurocurrency. Again, you got another delta scalper buy here, and it just shoots straight up. I mean, I should pull up a bar chart. It would be a lot easier, you know, than the footprint chart, just for visually to see it. But again, you know, this is a nice trade. You know, 118.85, 86 area, all the way up into the, you know, 119s again. So, you know, you're getting a lot of, you know, another delta scalper buy here. You know, back up into the new highs. And what do you got up here? You got ratio and divergence. Boom. You come back up here, you test the high, you don't get stopped out, and then you sell off again from, you know, the 119.13 area. You're back down, you know, below 119. You're back into the 118.80s again. Delta scalper gives you a buy here. You got a delta scalper sell. This one doesn't work out. The buy does. Okay, so, you know, you see all these trades, and, you know, you get stopped out here, you get stopped out here. Great, it's not the end of the world. You know, you've had a lot of nice trades. You got divergence there. You know, later in the day, you got a buy. You know, this is 2:50 in the afternoon. You get a little buy here, and it rallies back up in there. So, you know, there were some very, very nice trades to be had, you know, in the Eurocurrency. You know, even if you're just looking at a plain 5-minute chart in the Eurocurrency, what do you got? You had your buy here at 8:30. You know, again, 118.50 area all the way up to 119. Actually, it goes higher all the way, you know, up here. You got another buy here, 119 area. So again, that's 50 points in the Eurocurrency on a 5-minute chart. That's brilliant. You know, I mean, you just do that once a day and you'd be happy. I mean, you'd be lucky to get it once a day. Some days you won't get it. Some days you might get, you know, minus 10 ticks. Some days you might get plus 20 ticks. But you know what? Those days where you get 50 ticks, you know, that's what's going to make your account grow. Okay, so really quick, I'll talk about crude oil here. Crude had a nice rally today, and you know, this morning, you know, today's European session, we were rallying. You got a divergence that failed here, divergence that failed. You started selling off here. Now this was, you know, this is it's hard to explain properly, but this is sort of a order flow pattern that you see, right? You hit your high, you sell off a little bit, then you come back up. You get the single print, you get the bearish ratio, and then you sell off again. You know, what it's telling you is, you know, we hit our high, sold off, buyers are coming back in, seeing if they can take it higher. You're getting the price rejection. I don't understand how people look at normal candlestick bars and say they're trading price action. You know, that's, I don't know. It's, you know, they're not, I guess, yeah, they're trading price action. I guess the way I describe what order flow is more volume action, and volume is going to be more important than price. If you treat price the same, all prices as being equal, you're way off in your trading analysis. You know, it's going to be, what's going to be more important, you know, when you trade zero prices at a level, even though, you know, on the offer, or you trade 61, you know, people that they'll just say, well, we traded there, you know, here we traded this price, period. But when you look at it and you analyze it, well, yeah, you traded, you know, 9 lots there against 89 here. You got an imbalance. You know, that's important information. If you're not using this information in your trading, you're really, you know, leaving a lot, I mean, on the table. You're leaving very important information. You know, not all prices are equal. And if you treat all prices as being equal, then, you know, you're gonna suffer. You know, here, right, you got 2 lots traded on the bid here at 46, I don't know what this was, 46.15. But, you know, people just say, well, yeah, you know, they won't even notice that because they're just, okay, well, we traded 46.15. But when you look at this, you know that this is a very bullish sign, you know, these single prints in the bar. And because the market's moving quickly. So anyway, you know, we come off the high, price action, volume action, however you want to describe it. I prefer volume action a bit better than price action, actually. And you rally back up. You got some signs of price rejection here based on the volume. You sell off, you come down into the swing low here at, you know, 46 bucks, and then the buying just comes right back in. You know, at this point, everyone is thinking, you know, hey, 46 bucks is a good base. You know, earlier, right, we had traded up past 46 bucks, and look at this, we couldn't break back past $46 is right here. You know, we're hanging around 46.05, 46.07, 46.08. You make this move back down into 46 bucks, you see some very strong buying coming in here, 792, 463, 353. Next bar, look at this delta, 754. That's massive. Next bar, 696. So you know over these two bars, it's dominated by very aggressive buying. Even in this bar here where you have the delta scalper kicking off. I mean, look at this. Max delta, 760. So the strongest the delta was in the bar was 760. And it closed at 754. So it closed right almost on its max delta number. And even this bar here, you know, as we're selling down into 46 bucks, right? You had aggressive selling, min delta minus 412. But what happened? The buying came back and went from minus 412 to plus 90. So that's a swing of almost 500 lots, you know, from net aggressive selling to net aggressive buying. And then, you know, delta scalper kicks off, and we pop up here. We start going up to new highs. You have a divergence here. That's not necessarily a reason by itself to sell. I hate selling. I hate when people say, well, you got a divergence, you got to sell. No, you don't. You know, you need something else in there besides the divergence, because on a trending day, when the market's trending, you're going to run into a lot of failed divergences. I don't even know how many failed divergences are on this move here, but let's see. Let's count them. Let's see if there's any reason to be getting short at any of these levels. Again, you got a failed divergence. That's not a reason by itself to fail. Boom. Another failed divergence here. Boom. You take out the highs. You got a nice stacked buying imbalance as you take out the high. Up here you got a divergence, no ratio. Now you're at 47 bucks. So you've just rallied 100 ticks. You know, you rallied a buck. Went from 46 up to 47. No reason to be selling here. Get up here, no divergence. Now here, you got a divergence and a ratio. Where are we trading? We're trading 47.36. So you got your first bearish sign up here. You got your divergence, you got your bearish ratio. Next bar, you got the delta scalper coming in. You got 39 delta on here, sorry, negative 39. Then this bar, minus 300. This bar, minus 374. This bar, minus 266. So, you know, you got 4 bars. You're spending, you know, a lot of negative delta. I mean, earlier you had some bars here with negative delta as well. Then you came right back up. So again, you know, maybe you're not convinced that this market's going to sell off. But there are signs already, you know, because earlier you had similar signs, but slightly different. You know, what's missing here? You don't have the divergence. You don't have the ratio. You don't have delta scalper coming in. This yellow thing is another indicator, is the transition. So it's transitioning from what was a demand-driven market to a supply-driven market. That's what that means, that transition. It's hard to see that. But what do you got? You know, so it's slightly different, right? It's, even though it looks the same visually, you know, you hit your high, you come off a little bit, then you come back up, make a new high, you hit your high, you come off a little bit. Looks like we're starting to come back. Delta's net stronger, 300, 374, 266. Here's just 292, 228, 138. But you're seeing the signs in the order flow already that you didn't see here. You know, even though it looks similar, it's not. It's different. It's much more negative. And what happens? You start going sideways. Start going sideways, then boom, look at this delta. Minus 630. You had one bar here, positive 194. Okay, fair enough. It's not the end of the world. You got a bar with positive delta. 630. That's strong negative. Big selling imbalance, 799. Next bar, 1156. So at this point, you should be thinking, this market's going to sell off. There's nothing in here telling you this market is going to go higher at this point. Is there? Right now, no. Now, does it sell off? Yeah, it does. It's not the biggest move. It gets back down to below 4,700, I think. You know, here 4700. So, you know, is it a massive move? Is it a move like we just had? We just had, you know, a dollar move in the crude oil from 46 up all the way up to the 47s. You know, it'd be nice to get a move like that on the way back down. But again, you can only trade what the market's going to give you, and it's not giving you a monster move. But it's giving you a decent move, you know, from 47.25 all the way back down to, you know, the 47.24, or sorry, 47 even area. And it just sort of goes sideways, you know, here over a while. We come back down, test 47 bucks again. You know, here we get below 47. And then you just start working your way back up, you know, on the swing low. Nothing really here telling you to buy. But, you know, the fact that we're starting to come back up, you know, at 47.10, if you're trailing your stop, you know, maybe you're getting out around 47.05, 47.10, who knows. So it wasn't, you know, the big move back down that you had, you know, on the back of the big move back up. Big move back up was a nice move if you were on board for that. And you could have got something on that move off that high as well. Just really quick, just to make it a little easier to see, this is what it looked like on the normal bar chart. Here's your dollar move up from 46, I don't know what that is, 46.15 all the way up to 47.20. And then from 47, this is just the delta scalper, from 47.20 back down somewhere in here, maybe 47.10 if you cover it in here. You had buy here just before the close though, and then we're a little bit lower in the evening session. Okay, so let's just see if there's any other interesting charts to show you. I don't know if there's, again, people always ask, can the delta scalper work with the Uni-Renko chart? Yes, it can. Here you had one signal in the S&Ps. Wasn't the biggest move down, but it was a nice little trade there to be had. Let me see if I got any other markets that gave some decent signals. Let's take a look at NASDAQ. I honestly, I looked at NASDAQ earlier, but I'm kind of curious to see how it ended up for the day. I've been liking the NASDAQ a lot lately. Where are you, NASDAQ? Bear with me here. I just record these things on the fly. I don't edit them and look for only the good trades to show you. I try to show you everything. I mean, that's what you need to see. You don't need to see only the trades that work out. You need to see when they're not working out as well. I mean, I wish every trade would work out, but again, NASDAQ is a market I think is best traded once the cash opens. But I mean, this one here was 5 in the morning. Got a little buy here. The sell doesn't work out. Then you get, after the cash open, you get this nice move here. I don't know what that is. 49.48 up into the 60 area. Couple sells, couple weak sells. This buy works out a little bit. Again, you should be trading with a stop, trailing your stop. So at least you'd get something out of these trades here, like this one. You wouldn't have got anything out. You get something out of that trade. Again, this one probably nothing. Probably just stopped out. This one you could have got something out of. Boom. Here, up, down, back up again. Again, are these monster moves? No. It's from, what was that, 80 up to the 86 area. Then again from the 85 area. Up in here maybe to the 92. So it's going back and forth. I mean, you're getting some opportunities, right? And that's what you want as a trader. It's not like every trade you're going to do is going to be a home run. It's like baseball. You're going to hit. How many home runs can a player hit in a year? Not many. They're going to get a lot more singles than doubles and triples, and they're going to get strikeouts. So. Not every trade is going to be a big home run. Like here, you get a nice little trade here. What is this? Eurocurrency. Boom, you get a decent trade here. This one doesn't really work out. This one's a nice trade. Again, that doesn't work out. Then you get a nice trade here. A nice little trade here. A small trade here. Get a really nice trade here. From 75 up to 119 even. You get the sell at 119 even. It comes off again, trailing your stop. You're getting short at 119 even. You're getting stopped out at 118.85. So you get some signals in here. This one fails. This one, small one, maybe fails. Again, another nice move up here. A couple fails. So that's what it's about, right? Don't think every trade you're going to have is going to be a monster trade with 100 ticks or whatever. I mean, yeah, that would be nice, but not everyone is going to do it. Again, this is really quick. This is the transition, Balto's transition. What it's doing? It's a 100 tick mini Dow. You can see here the red's the sell, the blue is the buy. So you get stopped out here, but you're getting some nice trades still. You're getting some nice trades. Yeah, you get stopped out. You lose 5 ticks, whoop-de-doo. But you know what? You're getting 30 ticks, 20 ticks on some of your winning trades, which is what you want to do. Everyone talks about the risk to reward ratio. So you got to have. Even if you have a risk-to-reward ratio of 3 to 1, you're not don't expect 50% winners. You know, if you have 10 to 1, don't expect, you know, 30% winners. You know, if you got a risk reward ratio of 10 to 1 and you're getting, you know, 20% winners, that's fantastic. You know, I know a lot of traders, they'll play those odds all day long. NASDAQ, right? This is 233 tick chart. Again, you know, trade fails. So you got 1 loser, 2 losers, 3 losers, 4 losers. Okay, so what are you losing? Maybe, you know, maybe you're getting, this one you shouldn't take because you let the market take you in. But if you did, you know, we'll say, you know, you're losing a point. We'll call it 2 points. So 1, 2, 3, 4. You just lost 8 ticks, 8 points. Okay, now you're getting along here again. You got another buy signal. You're getting along at 66. And what does it do? It trades all the way up to, you know, up to, I don't know what that is, 80, 82. You know, so 60, excuse me, 66 minus 82 is what, 16. So you just, you know, you lost 2 ticks here, 2, 4, 6, 8. You lost 8 ticks. You know, 1, 2, 3, 4, but you just got 16 back. You know, that's what when people talk about risk to reward ratio, that's what they mean. You know, like here, you know, again, you know, you're getting short at 96. You know, you're covering back down here at 90. You know, again, you're getting long at, you know, 91. You know, up to 96 again. So that's, you know, that's 3 to 1 risk to reward minimum. You know, just on these trades. So there's, again, you know, you got to understand your risk to reward and don't expect, you know, every trade to be a winner. That's what kills me. You know, I get people complaining, oh, you know, the Delta Scalper, it's, you know, it's got losers. Well, of course, no matter how you trade, you're going to have losers, and there's no 100% trading system. And everybody likes to win, right? People are competitive by nature. You know, since you're a little kid, right, you play sports, you know, everyone talks about you got to win. At least when I grew up, that's how it is. Now it's like, oh, you just participated, that's great. But, you know, in trading, there's no reward for participating. You know, you can lose all your money, and it's not like, oh, thanks for playing, here's a trophy. No, it's not. You know, your score is kept by, you know, the balance in your trading account, not, oh, you traded and that's good enough. No, it's not. You know, people trade because they want to make money, they want to win, and so there's a winning mentality. But, you know, people don't like to lose, and when you're trading with the risk to reward ratio of, say, 5 to 1, you know, you're happy to get, you know, 25% winners, you know, 4 to 1 winners, or, well, 1 winner to every 4 losers. You know, that's how it looks at. But, you know, people don't understand that. They, you know, everyone talks about risk to reward, but then, you know, no one wants to lose. And, you know, I understand that, and I hate to lose. But, you know, losing trades happen. But if you have a good, healthy risk to reward ratio, a high one, you're going to have a lot of little losers. You know, cut your winners short, cut your losers short, let your winners ride. That's what trading's about, isn't it? So anyway, I'm starting to babble. You know, I ended up going long on this one. It's a 30-minute video. Again, I'm trying to keep these a little bit shorter, 15 minutes. But sometimes, you know, I just get excited. You know, people think I'm drinking my own Kool-Aid, so to speak. But to learn more about Orderflows, go to orderflows.com. Learn more about the Delta Scalper, go to deltascalper.com. And again, you know, if you haven't subscribed to this channel, please subscribe. And I've got, you know, I'm working on a new project actually about trading. It deals with the mental side of trading, you know, why traders fail, why traders succeed, you know, things like setting goals and all that stuff. And that's why sometimes you don't see me doing a video if I just don't have time for everything. I wish I did. But you know, when you got 3 kids, 3 kids below the age of 5, your hands are pretty tied up. So anyway, guys, I'm just going on about nonsense now. So have a good day and enjoy the Labor Day weekend. It's a long weekend. So I'll catch you guys next week most likely. Bye bye.